Have you seen how the prices of everything keeps on going up? Gas prices, groceries, used cars, appliances, taxes. How about insurance, electricity, home prices? Even vacation homes are renting out at premium prices. Now, this is a major concern for most Americans who feel like we're entering into a super cycle of future inflation. No doubt about it, we all are going to be feeling this pinch. In this video, we're going to talk about the 6 huge inflationary problems that we all face and how you can actually prosper and profit from these times. So smash that like button, give me a thumbs up, and let's roll. Now, the cost of everything in America is skyrocketing. We're all paying much more than we were just 1 year ago for the same exact things. 40 years ago, this was the last time we had raging inflation just like this, and it's happening again. Now, nobody wants to pay higher prices for anything, but what we're seeing is inflation pushing up used car prices 25% higher than just 1 year ago. I got a question for you. When did the price of a used vehicle ever go up in price? Cars usually depreciate in value. This is absolutely crazy. So last year, the American home household expenses were under accounted for by a wide margin. Inflation last year has spiked to generational highs. Now, I'm going to say something, you may not want to hear it, but it's going to be the truth. This government and the Federal Reserve are not going to save you. The Fed's inflation model is broken. It's a big lie. Now, you understand this, and that's why you're watching this video, so you'll know exactly what to do. Number one, for months, they kept telling us this inflation is transitory, only 6%. Really? There's a lot of stuff that cost a lot more than 6% last year. So if that's true, then why is everything at the dollar store now $1.25? It's a $1.25 store. That's a 25% increase. How much did your house go up? 6%? Somebody's lying. Everyday stuff is costing a lot more than they're telling us. Now, the Fed told us that inflation is transitory. This won't leave a permanent mark on the form of higher inflation, they told us. Well, now they're saying maybe we were wrong. So if you already own a home, you're locked into one of these super low interest rates, you've already seen your home values increase thanks to inflation. In this case, inflation is helpful because it adds dollars to your home price. Now, inflation has increased your equity. This is great news if you want to sell because you can make a profit, and profit is not a dirty word. But the problem is, if you do want to sell and upgrade, new homes are going for a premium. Now, the naysayers say, yeah, but I don't want to sell the place. I need a place to live. No problem. We're currently seeing many who have pulled equity lines from their house and invested into a second stream of income, and purchasing the right income producing property can produce years of additional cash flow. And I'm going to dive into that a little bit later. Number 2, interest rate increased. Yeah, they should. Looking in the past 50 years, the 30-year mortgage rates have been nearly at 8%. We're nowhere close to that right now. You know, for years, the Fed has wanted to raise interest rates, but has failed to get to their target range. Now, when the Federal Reserve has one cycle after another, they're trying to resolve underlying issues of indebtedness. Now, every time we have a crisis, they try to solve the problem by putting more debt into the economy. Yet others inside the government are calling for more emergency measures, and they want to spend even more money. You know, whether it's infrastructure, childcare, U.S. national debt, there's always a battle. When they raise rates in order to slow the pace of the economy, we still need to keep interest rates low enough to keep the economy afloat. Now, this is a tricky and very difficult thing to pull off. And this is why we will see inflation for years. Now, the naysayers say, yeah, but rates are going up. Everything's going to crash and burn. Well, with higher interest rates during the 1970s and 80s, home prices still grew with inflation. It was not a crash. The prices increased year after year after year. And this isn't 2007 either. Banks are not giving away mortgages to non-qualified, limited documentation, high debt to income, low credit scores. That was a bank mortgage crisis. Inflation is an entirely different issue and is affecting all sectors of the economy. So when mortgage rates go up higher this year, these rates are still super cheap. Looking at the past 50 years, the average 30-year mortgage rates were at 8%. And again, we're nowhere close to that. So why do you think that 18% of home sales last year were sold to investors? Investment funds, corporations, even small investors are scooping up as much affordable housing as they can so that they can turn it into income and get ahead of these inflationary times. By collecting the income rent and using inflation for property value appreciation. Plus, increasing rents keep pace with inflation. So it's a twofold compound effect. Number 3, the Fed loves inflation because it pays down the national debt. U.S. Treasury's debt is diminished with inflation. So the Fed printed trillions of dollars to keep the economy rolling and allowed personal consumer spending during the pandemic. But wealth is not created by printing money. The exact opposite happens. In the 1970s, printing money eroded the value of the dollar, and it left many much poorer than they were in the 1960s. And this looks like it's happening again. Now for the naysayers. Yeah, but printing money has nothing to do with inflation. Really? The fact that we printed 40% of all US dollars within the last year has nothing to do with inflation? Interesting. Now, printing money is a terrible economic policy. Take a look at Venezuela and Zimbabwe. They have 4- and 5-digit inflation for years. Now, you may not want to hear it, but it's the truth. Hard assets refer to tangible items or a resource of fundamental value. Things like real estate, buildings, rentals, machinery, equipment. These are tangible items. You can feel it, you can touch it, you can use it, and it can generate you income. Now, I'm not talking about paper items like stocks, bonds, and cash. Think about the value of your home. And here's the shocking part. Cash is trash. Now, hear me out. So I'm going to give you an example of a tangible item I bought 4 years ago that has increased in value with inflation. This pinball machine I bought 4 years ago for $4,500. Today, I was just offered $9,500 in cash. So am I saying buy pinball machines? No. What I'm saying is I'm giving you a simple example of an asset that increases with inflation. If I had my original $4,500 sitting in the bank account, I would have earned $51 in interest. Now, hear me out. We started this video by saying groceries, gas, and insurance, and everything is costing us more to live. So, by keeping your money in the bank and not investing it in hard assets like real estate and other things, you could be slipping further behind every single day. Now, cash reserves are good. Trust me, I'm a big fan. But if you're sitting a large amount of cash during inflationary times like we have right now, your money's buying power is going down in value every single day. You need to have it working for you. Number 4, wage increases versus inflation eroding income. Now, the government does not create jobs. Only businesses and business owners create jobs. The government did give out stimulus checks to the public. And in recent years, outside forces have totally changed the labor market. So on one side, we have a huge demand for skilled trades like electricians and plumbers and construction and welders and HVAC techs. On the other side, we have outsourcing to countries such as the technology and manufacturing have shifted offshore. But some U.S. businesses did increase wages. But the current wages have not kept pace with the amount of what things cost in the American household now. So if a business has increased costs due to inflation, then they say, I have to increase the prices of services and goods to compensate and pass it along to higher prices to consumers, which only throws more gas onto a raging fire of inflation. So for the naysayers, yeah, but I think my wages and salary are too low. I just can't get ahead. There's a cure for that. Either A, cut expenses or cut overhead, or B, increase income. Now, getting a side hustle, a secondary job, or an income-producing hobby is a great way to get ahead. Growing up in my blue-collar neighborhood, I always had several side jobs while I was working my full-time job. I was buying and selling, fixing up cars, selling them for a profit. I cut grass, I did odd jobs, and the additional income allowed me to build a nest egg in which I invested into income-producing real estate. Number 5, the government can't stabilize prices. This government has allowed to let inflation run hot going forward and trying to balance it out with all the problems that we have in the economy. That's a bunch of BS. Once inflation kicks in, it's extremely hard to put that fire out. Take a look at what happened to Jimmy Carter during the 1977 to 1980 presidency. It was an era of inflation. Consumers paid the price with weak government policy and a full-blown misery index. History repeats. During the 1970s and early 80s, prices did not make things crash. You know what? There was no bubble. Back then, investors waited for prices to drop, but the prices of everything only continued to increase and went up. So the moral to the story is, be prepared. Runaway inflation is here to stay. Now for the naysayers, yeah, but traditionally, if you invest in gold and silver, it's a hedge against inflation. Well, then why have gold prices actually dropped to less than they were a year ago? I don't know of a grocery store where I can go buy food or pay for it with gold bars or Bitcoin. When you sell commodities, okay, and things that are hard assets, you still have the middleman that takes a cut of profits, okay? But the good news is, with many assets, many hard assets, that is, if you have a willing, ready, and able buyer, and you have a willing, ready, and able seller, you can pretty much sell it without a hassle. Number 6, supply and demand. Now remember the store shelves when you couldn't find this, right? Supply and demand. Simple rules of supply and demand. How about the backed up shipping ports and bottlenecks caused by the pandemic? Those were supposed to fade. Do you still see backups at ports? Do you see new car lots with just a handful of cars? Not as many as there used to be. This inflation economy has a long way to go and is nowhere near being settled yet. So now for the naysayers, yeah, but the price of TVs did go down last year. Maybe. That was probably the only thing that went down. I'm trying to find another one that went down. Everything seems to be going up in price. Now, the experts believe that we're going to see a diminished consumer spending in the coming years in order to compensate for these higher prices that consumers are paying. Cutting food expenses and fuel expenses is really hard to do if you're going to do it quickly. So prices have also spiked as we transition away from gas to electricity. Many are going to be crushed by high energy bills trying to keep warm this winter. Now, I believe we will see companies like Netflix and Spotify being hit with low subscriber growth. These are the types of companies that you can spot the first weakness due to household spending cuts. If you have to pay more for food, gas, insurance, many households are going to cut somewhere, right? So, I've seen everything from washing machines to new cars with supply chain issues. Because we don't make chips here in the United States anymore, and with fewer goods coming out of the United States as opposed to imports coming in, we're seeing a huge import shipping crunch. The Fed cannot control inflation. It cannot do anything to rein in the cost of living in the United States. Look at what happened to Jimmy Carter. Prices rise with inflation month after month and year after year. The best place to leverage yourself is real estate or hard assets. Yet many will do the exact opposite. So, have you looked at your checking account? What's it paying you? You know, this is your time. You know what to do now. You know how to win with inflation, and you actually can profit with inflation. I want to hear what moves you're making right now. I want to hear what you're doing to get ahead of inflation. You know, the naysayers are going to whine and complain. But don't let this opportunity once in a lifetime pass you by. Tell me what you're actually going to do about it. Be great, do great things. You've already seen these crash and burn videos that are out there. They do nothing to help you. I'm here on this channel to provide you with helpful information. So please give me a thumbs up. And if you would, subscribe. I truly appreciate you, and I'll see you in the next video. Take care, guys.